Hi, I'm Michael Murphy. I'm a chartered financial analyst and I'm the editor of New World Investor. And I've written a book called Survive the Great Inflation. The subtitle is How to Protect Yourself, Your Family, and Your Future from the Worst Fed Regime Ever. This is the third video I've done on this book. The first and the second you can watch on survivethegreatinflation.com. The first one was basically about the forces in our economy, the true deflationary forces in our economy, and how really the bulk of them can't be dealt with by the Fed or, for that matter, by the government running big deficits. But I also pointed out that that's exactly what they're going to try to do. And in the second video, I talked about how the Fed does that, how they actually do create money and run those deficits, and why it's going to not end well. In this video, I want to talk about how to protect yourself and your family. There's two things we're worried about here. One is a big inflation, double-digit inflation. The other is hyperinflation. I'm sure Ben Bernanke thinks the chances of hyperinflation are like 1%. I wish he was right. I think they're more like about 30%. They're totally different. In fact, you can get a hyperinflation without even having the double-digit inflation first, and I'll talk about that in a second, how that works. A hyperinflation is much worse. So the thing you need to do in either case is protect yourself by only holding hard assets, assets like land, houses, real estate, timber, stocks in real companies, gold, silver, precious metals, the things that people will want and that can hold their value as the value of the dollar goes down. Because what you have to understand is inflation is not really the prices of things going up. It's the value of the dollar going down because too many dollars have been printed and it takes more dollars, more of these less valuable dollars to buy what you wanted. And of course, the classic one is that with an ounce of gold in 1913, when the Fed was started, you could buy a really good man's suit. And today, with an ounce of gold, you can buy a really good man's suit. Gold has held its value in terms of the real world. Even though the price of gold has gone up very sharply, it's just a reflection of the drop in the dollar. The flip side of holding assets is that you do not want to have any adjustable rate debt. But you do want fixed rate debt, because if you have fixed rate debt, like a mortgage for example, as the dollar becomes less and less valuable, it becomes easier and easier to pay that off, because presumably your income will go up with inflation. It may lag somewhat, that's usual, especially in the beginning of an economic cycle, but at the very least it will go up. So what are these assets and how should you structure a portfolio to hold them? Well, this is a great time to be buying real estate. Obviously, we have a lot of foreclosures, and we have the peak of foreclosures really just ahead of us in 2011. The banks are stuck with an awful lot of real estate, and they're willing to finance it at very low rates, thanks to the federal government, on fixed terms. So if you don't own a house yet, or you don't own real estate, or you need something for your kids, or you're thinking about buying something for retirement, or even if you just think it's a good idea to buy a house, live in it for 2 years, and sell it and take the tax-free gain, I think this is a great time to do that. It's also, in spite of the strong rally in the precious metals, gold and silver, a very important time to own some gold and silver, particularly junk silver. I think everybody should have a $100 face value bag of junk silver, more if you can afford it, and have it a place you can get it. In other words, not in a safe deposit box in a bank that might be closed, but somewhere where you can get to it. And I talk in my book about places you can safely store that kind of thing. Otherwise, there are stocks that you can invest in, trusts, real estate investment trusts, mortgage investment trusts, REITs that invest in timber, for example, that pay very good yields out of their cash earnings, and that as their cash earnings increase, which they will with a high inflation, will continue to pay those yields out to you. I think you really should think about structuring your whole portfolio in what I call the barbell portfolio, where one side of it is very safe, very conservative, and quite a bit of your portfolio, 90 or 95%. If you're older, maybe 75, 60% if you're younger, just starting out. invested in these high-income, deep-value, safe vehicles like REITs and preferred stocks and that sort of thing. They're going to keep paying you 8, 9, 10, 11% yields, and the yields can grow as inflation takes off. That's very important. The other part of your portfolio, the much smaller part of your portfolio, should be in things where you can really hit a home run. Those would be things like companies working in new technologies or biotechnology companies that have new drugs, or junior gold miners and junior silver miners who are really going to be in the catbird seat as the price of the metal continues to climb. So those are things that I talk about at length in the book, where you can construct a portfolio that will not be too volatile because of the large component you have in the safe stuff, but still offer you the chance for growth in income, not only from your safe portfolio, but also from hitting some of those home runs at the other end. As you go to construct that kind of portfolio, and as you look at what you need to own, you'll notice I've left out kind of everything in the middle: index funds, even the big blue chip stocks, which admittedly are relatively cheap right now, all the kinds of things that institutions own. And the reason for that is, even though they may not seem relatively risky, in absolute risk terms, as we learned in 2008, those things can really collapse on you. And you just can't afford to have that kind of thing facing you in the high inflation environment we're going into. Now let me say a word or two about hyperinflation, because that's quite different. What causes a hyperinflation is not excess demand, too much money in the economy sloshing around, the kind of thing that causes double-digit inflation. What causes a hyperinflation is people lose confidence in the currency, and they simply don't want to hold it anymore. And it really makes me angry that Ben Bernanke has put our country in the position where this could happen. You have to actually think about the danger of it happening. Because in a hyperinflation, the value of the dollar can fall very fast, very quickly. It can be a matter of weeks before all of a sudden no one wants to hold dollars. I know that seems impossible, but just think, if you have a failed treasury auction, for example, and Bernanke has to step in and sop the money up, either directly, the bonds, or he buys them through his account in England so it looks like England is buying them, or whatever he does. And some of the banks out there, they're absolutely loaded to the gills with treasury, see that happen and say, you know, we probably have too many treasuries, let's sell some. And when Bernanke sees those sales coming into the market, he steps in and he buys again, because that's what quantitative easing is all about. That's what he does. He buys treasury bonds and puts cash into the economy. And then other banks see that and they say, hey, look, you know, there's a lot of bonds being sold. Their traders see it. They come to the management and say, we don't know what's going on, but there's a lot of bonds being sold, and the only buyer's the Fed. And they say, oh, well, you know, maybe we should lighten up too. And the next thing you know, you've got the overseas guys, the Chinese, everybody just trying to get out of the dollar. And in that environment, you really need to have some junk silver, because you might just plain need it to function. I know it's a scary thing to think about, but there are solutions to this. The book is going to be launched on October 12th on Amazon with hundreds of dollars worth of bonuses. If you go to the homepage of survivethegreatinflation.com, give me your name and email address. I'll be glad to email you as soon as the book is launched, as soon as you can get your bonuses, and also if there's another video in this series. Thanks for watching.